Okay, before we start the video, I want to just talk about one of our sponsors, Max Wright. He's actually putting together a webinar training which is going to teach you how to invest $5,000 wisely today that can give you a passive income of $100,000 per year or more in as little as 18 months. So this is an invitation-only webinar that he will be sharing all of this info with you. I'll put a link to the webinar underneath this video, as well as it's go.doubleclick.com/MaxWright. Max has been calling different Bitcoin cycles for the last 6 or 7 years. I've personally known him for about 13 years now, since I was about 20 years old. I'm 33 now. And he's a solid guy. He's super knowledgeable. He's got great insights into the cryptocurrency market, and he's really in this for the long term. He's also a great person to find different ways to make money both online and offline. So I'd strongly recommend sign up to this webinar, take the time, watch it. You will get massive amounts of value from Max. And for those of you who've been watching some of the videos previously, you would have seen his insights into BTC and why he feels like this is going to be at least $100,000 BTC in the next 12 to 18 months. So go ahead, register now, and let me know in the comments what you thought of the webinar. Hey guys and girls, welcome to another video. My name is Mitch, I'll be your host in this video today. If you have any questions, please feel free to leave them below. But today we're going to be talking about the crypto money flow. There's a lot of really exciting things that I'm going to cover in this video, so make sure you stay on to the very end. And then you've got potential to earn some money or win some crypto. So what I'm going to be covering in this video is how the crypto money flow works, how it moves between Bitcoin, fiat, Bitcoin, large caps, mid caps, and then low cap coins, and then back again on a full circle. I'm also going to be going over the 2020 crypto money flow cycle and how you can take advantage of that and really utilize that in your own portfolio. And I'm also going to be giving you some analysis of the crypto money cycle in 2020. So stay tuned for this video. The crypto money flow cycle. Money in the crypto market flows in a predictably cyclical manner. And the reason money flows this way is because these movements are underpinned by human psychology. The crypto money flow cycle is predictable because crypto market participants are predictably irrational. Throughout this video, I'll discuss how the emotions of investors change throughout the flow of the money in the crypto market, and in turn what implications these movements could have for your crypto investment and portfolio. Perhaps most importantly, dissecting the money flow cycle will help you learn about timing key moments in your investing approach, such as when to consolidate your portfolio to Bitcoin, when to diversify into certain types of assets, or when to exit the crypto markets altogether and preserve your cash position. In this video, I'll be covering how money flows into crypto, the 2020 crypto money flow cycle, and analysis of micro money flow cycles in 2020. Let's jump right into it. How does money flow into crypto? So firstly, it flows in via fiat. The crypto money flow cycle begins with fiat, whether it's US dollars, the Great British Pound, or the Euro, or Australian dollars, cash is needed in order to make cryptocurrency an investment. It then moves on to Bitcoin. The typical cryptocurrency investment will start with Bitcoin, as it is the world's most notable cryptocurrency and everything is based in Satoshis off Bitcoin. And as more investors dedicate a portion of their income/savings into Bitcoin, the price of the asset will rise. When Bitcoin's price rises, it is at this point in time where investors are enjoying enough returns to start thinking about how they can build their wealth even more. Inevitably, they stand before the decision of whether to simply buy more Bitcoin or to allocate some of their funds and build exposure in other cryptocurrencies. These coins are the alternative coins, the alternate Bitcoins, or the altcoins. And they're likely offered on the very same exchange where the investor bought their Bitcoin. Then we move to large caps, and this is predominantly Ethereum and the top 5 coins. During Bitcoin uptrends, investors develop a growing need for a higher return on their cryptocurrency investment, which is why they seek to diversify their funds into altcoins like Ethereum. Ethereum is arguably the most well-known cryptocurrency as an alternative to Bitcoin and is often the next logical choice to building a diversified portfolio. And though a well-established platform by now, Ethereum is still a smaller cryptocurrency by market capitalization compared to Bitcoin. So theoretically, an investment in Ethereum carries more risk than an investment in Bitcoin would. And on the flip side, however, an investment in Ethereum would yield higher returns compared to an investment in Bitcoin. This change in risk is important in the context of the money flow cycle, as it highlights not only how investors tend to lust for higher returns on their cryptocurrency portfolio, but also how the risk appetite of their investors grow as the Bitcoin uptrend rises. Now we move into mid-cap altcoins. That being said, many smaller altcoin projects are built on Ethereum, which is why Ethereum is often heralded as the leading indicator for increases in the valuation of smaller altcoins. When Ethereum appreciates in price, the prices of smaller altcoins rally shortly after. However, these altcoins are less known by the general public and therefore attract less investor interest. For that reason, these altcoins have smaller market capitalizations compared to Ethereum, let alone Bitcoin itself. Compared to the large cap altcoins like Ethereum, mid-cap altcoins have the potential to rally even higher when they generate interest from the crypto space, generating a far higher return on investment while simultaneously carrying much higher risk than large cap altcoins. Small cap altcoins. Small cap altcoins are ultra high risk, high reward investments and tend to rally exponentially at the very end of the crypto money flow cycle. As investors get in the habit of adopting more risk and they start seeking risk, the approach and circulating their profits into smaller and smaller market capped cryptocurrencies, inevitably they set their sights on higher risk, higher reward investments. This is why these type of altcoins tend to rally multiple the times that Bitcoin or Ethereum offers, such as 2, 4, or even 10 times or more. And as the prospect of reward in a seamlessly never-ending uptrend appears ever more attractive, the risk appetite of investors impeccably grows alongside it. Low caps are the last altcoins to rally in the crypto money flow cycle, as investors have no other coins to circulate profits to. In fact, many investors decide to book their profits at this time, securing their profits either in Bitcoin if they're trading altcoin/BTC pairs, or in fiat if they're trading altcoin/USD pairs. And then it goes back to the start of the cycle, back into Bitcoin or selling into fiat. When small cap altcoins rally exponentially, yielding investors a multiple worth of their return on their initial investment in the process, this sort of euphoria-fueled buyer-side pressure proceeds one of two ways. Money flows back into Bitcoin or money flows back into fiat. Should investor capital flow into fiat, it is likely that a corrective period of cryptocurrencies will lie ahead, as this is a moment in the cycle where investors secure their profits and de-risk completely from the cryptocurrency investments, causing asset prices to crash significantly. However, sometimes this money flows back into Bitcoin, further fueling the uptrend, and proceed further money flow back into the large caps, mid caps, and small caps once again in another cycle. Especially during bull markets, cryptocurrency experiences a handful of micro money flow cycles within a larger macro money flow cycle before enduring a market-wide corrective period when money flows from the market and finally into fiat. The 2020 crypto money flow cycle is a fantastic example of how these micro money flow cycles behave and will be the main focus of this video going forward. The 2020 crypto money flow cycle. The 2020 crypto money flow cycle is relatively easy to delineate, given how the markets were given a complete reset following the pandemic-induced sell-off in mid-March. This was a tumultuous time where cash-strapped investors panic sold their assets in an effort to build much-needed cash positions in preparation to deal with an unknown, highly contagious virus at the time that sent the world into lockdown. But the moment the market reached a point of maximum pessimism towards cryptocurrencies was the same exact moment the market had reached a point of maximum financial opportunity. Bargain buyers began to accumulate Bitcoin at the lows after the sharp correction and incidentally became the subtle first movers that kick-started the new bull cycle for Bitcoin. And every crypto money flow cycle begins with an investor capital flowing into Bitcoin. So money flow phased Bitcoin to Ethereum. Once Bitcoin had bottomed after the March sell-off, Bitcoin had begun its new bull trend. That said, the new uptrends don't continue without moments of respite, which is why Bitcoin often paused into periods of sideways price movement before making new local highs. But it was during these periods of consolidation that investors became more confident with diversifying their portfolios into altcoins. Having enjoyed some large profits from the Bitcoin uptrend, they were more willing to take on additional risk and circulate some capital into large cap altcoins like Ethereum. This is precisely why Bitcoin price consolidation is one of the most important prerequisites for investor money to flow away from Bitcoin and into altcoins. Money flow phase: Ethereum to mid-cap and small-cap altcoins. What happens to smaller altcoins when Ethereum consolidates? They significantly appreciate in value. Investors move their money into smaller and smaller altcoins during periods of Bitcoin and Ethereum consolidation, and their profit circulation is driven by greed in an effort to compound their profits into smaller and smaller altcoins. At the same time, their risk appetite grows as these altcoins tend to be high risk, very volatile assets. Lust for another win, chasing the next profitable coin are all important factors, but investors aren't only driven by greed in their profit circulation. And it is no coincidence that money flows away from Bitcoin and large caps like Ethereum during these periods of consolidation. Because among other emotions, boredom is also a factor. When Bitcoin and Ethereum consolidate, investors experience boredom and seek to replicate the excitement of exponential uptrends in smaller coins. So how can we track the price appreciation in smaller altcoins? Altcoin dominance is a useful metric for tracking the overall growth of altcoin valuations in the cryptocurrency market. Essentially, altcoin dominance represents the percentage of money in altcoin investments compared to the amount of money in the entire cryptocurrency market. So whenever the altcoin dominance trend is up, altcoin valuations are growing and vice versa. It is during periods of consolidation for Bitcoin and Ethereum that altcoin valuations grow exponentially as per the money flow cycle. Conclusion: Bitcoin's enjoyed a new bull market since bottoming in mid-March of 2020, and during its uptrends, Ethereum was able to follow suit. It was especially during Bitcoin's price consolidation that Ethereum was able to compensate for its lag to Bitcoin and catch up, only to form a consolidation range of its own. It was during Ethereum's price consolidation that ETH figured out as a leader of the altcoin market, promoting money flow into smaller altcoins. And once Bitcoin would break out from its sideways range, Ethereum would initially lag behind, but later managed to break itself out, both setting the stage for yet another macro money flow cycle. After all, the three sideways channels in Bitcoin and Ethereum price action each show micro money flow cycles whereby money would flow from Bitcoin to Ethereum, i.e. a large cap to a mid cap and small caps before recycling back into Bitcoin to start the cycle all over again. Understanding how money in the crypto market is flowing at any given time is a useful skill, as it will help you determine when to increase exposure to which type of cryptocurrency asset and when to increase exposure or to de-risk from altcoins completely, as well as when to hold on to Bitcoin and when to reduce your crypto altogether. Okay, so I hope that was super informative. I know that this is one of the number one topics that I've been getting both privately and publicly from my subscriber base. The crypto money cycle is very interesting one to take advantage of and to really understand, because taking profit is always a good idea, but a lot of people don't quite know when to take profit or when is a good time to take it. And this kind of gives you an understanding of how the different tokens or caps, I should say, work within the crypto money cycle, and how you can start to move your crypto between them to really take advantage of those 1 times, 2 times, 3 times ROIs. So as you've seen in previous videos, or you may not have seen in previous videos, this video is sponsored by BlockFi. BlockFi allows you to borrow against your crypto to go and make trades or simply just cash out and pay some bills. It's a really easy platform to use. I've recently used it, and it took about 5 hours between submitting my crypto, signing the application, and getting the loans funded. So I'm going to jump in right now and show you a little bit more about that. You've got the ability to put your crypto to work with BlockFi and earn up to 8.6% per annum with your interest account. Now, if you sign up today, you get up to a $250 crypto bonus with a deposit of $25 or more. This is really cool. If you're wanting to earn some interest on your cryptocurrency or just get some more crypto, this is a great way to do this. I also mentioned if you are looking to borrow against your cryptocurrency, they allow you to do that. They charge you a very low interest rate of 4.5%. they will lend up to 50% of your cryptocurrency. So if you got $10,000, they will lend you up to $5,000 at a 4.5% interest rate, which is essentially in Australia what you are paying for a mortgage for a house, which is just absolutely crazy. And the loan is for 12 months. They're also backed by some of the biggest names in cryptocurrency: Morgan Creek Capital Management, Coinbase Ventures, Galaxy Digital, the Winklevoss Capital, and a few other ones that I can't pronounce. Okay, so that's it for another video from me. I've really enjoyed making this for you, and as always, if you have any questions or comments, please leave them below or shoot me a message if you're not comfortable about putting them on the internet. Please leave me a like. Please subscribe to the channel if you're not already subscribed, and if you have any suggestions for future videos or different topics around the crypto space that you'd like me to cover, please leave them below and I'll be sure to create them for you. That's it from me, another video, and I'll see you in tomorrow's video. Take care.